Welcome back. I want to revisit one of the indicators we spoke about quite a while ago. It does a really good job of capturing and defining the trend of the market. In this case, the S&P 500. We call this the bull-bear trend indicator. Now, what it does is it uses the weekly market behavior to define the trend. A bull market is one that's trending higher, and that's encompasses a market where that opens at or near the low at the beginning of the week and closes for the week at or near the high. A bear market, one that's trending lower, opens at the high at the beginning of the week and closes at the low at the end of the week. So essentially, if we see a market, for example, on the left-hand side, we see a bull market that closes at the low of 41.73 on Monday, Tuesday 42.62, and by Friday closes at 44.63. That's a bull market that closes each day higher than the prior. Conversely, a bear market on the right-hand side opened at 3,900, will close at 3,900 for that day on Monday, Tuesday 38.56, and finally on Friday closes at 36.93. So every subsequent day closes lower. That's called a bear market. Our indicator, very simply, the bull-bear indicator, calculates the Monday and Friday closes as a percentage of the entire weekly range. So, for example, let's say we have a stock that's trading between $10 and $20 a share for that week. On Monday, the stock closes at $12 a share, which is just $2 off the low of that whole week of 10 to 20. So it's 20% of the weekly range, $2 off the low of 10. On Friday, the stock closes at $19 a share, which is $1 below the high of the week of $20 a week. So $20 a share, so that would be 90% of the weekly range. The bull-bear indicator, very simply, takes the average of the Friday closes as a percentage of the week minus the Monday opens as a percentage of the week. So essentially what it's doing is it's looking to define, did the market close higher at the end of the week or lower at the end of the week? Compared to where it opened the week. Now, the black line represents the S&P 500. The red histogram bars represent the bull-bear trend indicator. And we can see that currently we have the S&P 500, although we have seen some negative days over the past week or so, the bull-bear trend indicator is actually very much near its swing highs, at least going back to January of last year. Shows us a very strong market condition. In the past, we saw, for example, March of 2022, as this S&P 500 was enjoying a really precipitous drop to the downside. The bull-bear trend indicator hit a level of a minus 22%. We then had a very sharp rise in July, August of last year, but the market breadth, the actual bull-bear trend indicator did not show a tremendous amount of strength. It shows us that during that period of time, July of last year, August of last year, when the stock market was strong, it wasn't really closing at the high of the week. Those were very mixed markets. Maybe it closed in the middle of the range for the week. However, we can see here that the market really has been closing near the higher end of the week. More so it has than in quite a long time. Now take a look at the following. Black line is the S&P 500. The red line is a bull-bear trend indicator, what we've just seen over here. And the black area chart behind it are the histogram bars. That shows us the 90-day correlation, the relationship between the S&P 500 and the bull-bear trend indicator. So notice, for example, in the past, July of 2021, as the S&P 500 was going up quite a bit, the bull-bear trend indicator also went up quite a bit. It was a confirmation of a very strong trend to the upside. Conversely, when we had that very big sell-off going back to February, March of last year, there was also a very strong correlation. The bull-bear trend indicator was going down as the S&P 500 was going down. What this shows us, these correlations, is that when we have a very strong trend to the upside or downside, we want to look for confirmation, and we will see confirmation with a bull-bear trend indicator. Currently, we have a very strong correlation, around an 80% correlation between the S&P 500 and the bull-bear trend indicator. It means as the stock market's been going up since about October of 2022 until present date, as the stock market has been going up, it also has been behaving in a very positive way as well. Meaning it has been closing near the highs on Fridays. It's been opening near the lows on Mondays. A stock trader buying the average stock on Monday is usually making money by Friday. Now, we know that when trending markets get very directional in one direction, sometimes that leads to capitulation points. And we can see in the past, and this is really what's very interesting, in the previous times that the bull bear trend indicator has hit a correlation on 80%. We hit 84% August of 2021. We hit 89% October of 2020. And then currently we have a correlation right around 80% as well. We see that tends to be a turning point. When we had that 89% correlation between the S&P 500 and the bull bear trend indicator going back to August of 2020, we saw a pretty good correction in the S&P 500. Even more so that when we saw a very strong correlation going back to August of 2021, we eventually did see a very strong reversal also in the S&P 500. Does our current very strong correlation indicate we may be due for a turn? Perhaps, only time will tell, but that is what the data suggests, is that when we have a very aligned bull bear trend indicator and the S&P 500 and a correlation of around 80%, that sometimes does lead to big reversals. We'll be sure to keep an eye on this indicator and make any note of any significant changes moving forward. We hope this has been helpful. We look forward to seeing you back soon.